Welcome back. I'm Pratap here. Today is 13th February 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. A small announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are placed in a playlist called Supply Demand Zone Price Action course. So you can visit our YouTube channel from the home page, scroll down to this playlist, Supply Demand Zone Price Action course. Click on this playlist, you will be able to access all the training lessons. Scroll down to this playlist from the bottom, starting from lesson 1.1, all the training videos are placed in an order. So please go through all these videos one by one so that you will be able to strengthen your skills related to demand and supply zone. So I provided my best training by sharing my complete experience and make use of this opportunity. I have provided the link to this playlist in this YouTube video description. By clicking the link, directly you can get into this page. I have also provided the link to our Telegram channel in this YouTube video description. So you can also join there. The advantage is each time we release a video, we will update in the Telegram channel. Now let us get into analysis discussion. Before we get into these high liquidity zones, look into Nifty 50. Nifty 50 is currently moving in a sideways market. I'm not telling this point based on the zone violation trend or based on higher highs and higher lows or lower highs and lower lows trend calculation. I'm telling this point by looking into the exponential moving average, EMA20. Look into this blue color line. This is representing EMA20. This is what we discussed in our recent exponential moving average session. So in sideways market, the prices will be moving around this moving average line. See here, almost from January 15th, the prices are started moving around this moving average. Quite frequently, they are going below the moving average, again they are going above the moving average, again they are going below the moving average. See here. So such kind of price direction you can observe only in the ranging market. So this is one way moving averages also will help us. So that's why you should be very careful. We already learned in the recent lesson, moving averages should be used only in the trending market. You should not use them in ranging market. Always you get false signals. You should not look for zone confluence. You should not look for zone confluence when the market is in ranging. Otherwise, every time you will get signals. You don't know which demand zone or which supply zone you have to make use. Zone confluence should be used only in the trending market. That is the point you should understand. Okay, now let us get into the high liquidity zone analysis. First, let us look into the high liquidity zone that has given some profit for us. So today there is only one high liquidity zone we gave the profit. We have 4 stocks high liquidity zones generated. Out of these 4, 2 are triggered, but one zone is violated. But we know that the zone is violated, it will be violated. I will tell you the reasons. And another zone is Atul, which gave some profit for us. So Atul is a high liquidity 75-minute supply zone. Yesterday we got this stock near high liquidity supply zone. So we have a rally, 3 base candles and a drop candle. This is the way we identified this supply zone. And this supply zone again we fine-tuned at 15 minutes level. At 15 minutes level we identified 2 15-minute zone. This is the first one. We have a rally 1, 2, 3, 4, 5, 6 base candles and again a drop candle. After that, this zone is already tested. Because it is already tested, we cannot plan a trade in this. I have fine-tuned even 5 minutes, but we cannot plan. Already it is tested. But look into this. There is one more. We have drop, base, drop. This is a 15-minute zone. Inside 15-minute zone, we identified a fresh 5-minute zone at the distal line of the 15-minute zone. We also identified one more 5-minute zone at the proximal line of this type 1 proximal line of this 15-minute zone. That means 15 minutes zone high, we have a 5-minute zone. 15 minutes zone low also we have a 5-minute zone. Obviously, the one which is near we will be planning. And moreover, the one which is near to this zone low is having a huge order flow. That I will show you in 5 minutes, you will get clarity. Now I am moving to the 5 minutes time frame. If you look into this price action, see here, prices are reaching the 15 minutes. Sorry, it's not demand zone. I think, sorry for my mistake. I've been pronouncing it as a demand zone. It is a supply zone. Look into this 15-minute supply zone. Prices are reaching to the proximal line of the 15-minute supply zone. See how they are going down. Again reaching to the proximal line. How they are going down. Again. Even today. So what does it indicate? There is a lot of liquidity in this area. There is a high liquidity in this area. When there is a high liquidity in any area, I already told you, in lower time frame, see, we are talking about the high liquidity at 15-minute zone. When there is a lot of liquidity in its lower time frame, zones will be keep on creating new zones. See here, because this is a 15 minutes high liquidity area, 5 minutes, it keep on creating. We have a rally candle, base candle, drop. Again, we have a rally candle, base candles and drop. Again, you see here, this time prices did not create a new zone. This is what happened today. Actually, today we got our trade here in this zone. So how we can take, because here a new 5-minute zone is created. See, the one I have drawn earlier 5 minutes I am referring, but see here, if you want to draw, you can draw a zone like this. This is again a new 5 minutes created. So within this zone we have taken the trade today. This is the candle at 11 o'clock 25 minutes, 5 minutes candle. If you missed, you got another opportunity at 11 o'clock 35 minutes candle. Within 10 minutes, second opportunity we got. So one of these candles, you would have taken the trade. Where we have taken the trade? Because to minimize the risk, because both these zones are overlapped, the newly created and the previous one. So here we have taken a trade at this proximal line. Okay, what is the target? 15 minutes target. What is the 15 minutes target? We have a drop candle. This is also looking like a ERC candle, but okay, some extent we can consider this, and a rally candle, follow through candle. So prices, we got an entry here. In this candle we got, and 15 minutes candle we got the entry. And here it reached the target very close. Just 4 rupees before reaching this target. 4 rupees before reaching the target. Again it turned back, prices started moving up. But those who booked our profit, people generally what they do, some maybe 2 rupees or 3 rupees, 4 rupees before the zone, you will place your exit orders. That is your profit booking. Some people wait till the prices reach into this zone. This is the way different people. But those who have at least 4 rupees before that, if you would have placed your profit booking orders, that is your exit orders, probably you would have got 4,000 425 rupees profit, which is a 5.2% ROI. But most of the time what we do, we wait, because our impression is prices will be reaching, after reaching the pending orders will push. If those who waited, you would have missed your profit booking in this area. Then how to book the profit? Generally, I told you, when prices are reaching near to the zone, many times these zones will be violated, demand zones. That way we don't want to miss more profit. For that, I already told you a technique. What is the technique? Trailing stop loss. So go to the 5 minutes time frame. You go to the 5 minutes time frame, near the zone, whichever the supply zone is there, that supply zone you will be using as a trailing. If that is violated, actually what happens, if the trend is down, supply zones, 5 minute supply zone should not be violated. If that is violated, means demand is strong, new demand is added by the institutions. That is an indication we need to exit our trade. And moreover, especially the zones are near to the demand zone. See, near to the demand zone. See, this is almost near to the demand zone. This is the way you have to draw. See here, what happened? Prices did not reach. You are waiting for the 4 rupees also to fill the gap and enter into this zone. Let us assume you did not book your profit. You are waiting prices to enter into this zone. Now what happened? Here a zone is created, a new demand zone is created with a rally candle. And see here in this candle, with the open, prices violated this supply zone, 5 minute supply zone. Immediately what you do? You will exit at the digital line. So what is the digital line value of this? 6,354 rupees, 15 paisa. So somewhere around 6,000, somewhere around 6,354 rupees, you would have exited. 6,054 rupees, 15 paisa, or maybe if you would have added some buffer, with that price you would have exited. And that means your target is only going to be this much. Let me draw the info line. So around 39 rupees is your profit. Actually, how much you are expecting? You are expecting a profit of 62 rupees. Instead of getting 62 rupees profit, now you got a profit of only 39 rupees. So that means around 22 rupees profit you lost. Why we lost? Because market direction is changed. I always tell markets are dynamic. When they are dynamic, immediately you need to exit your trades. If you feel market direction is changing, trailing stop loss is one important useful concept. Especially the zones, the supply zones, they are very close to the demand zone. They are very close to the demand zone. If that supply zone is violated, the 5 minute supply zone is violated, it's better to exit from the trade. Something is happening to the market. Maybe the demand is very strong in this area. Otherwise, what happens? These 5 minute supply zones won't be violated. Market will further reach into the zone. Or maybe if in the retracement, the pending orders in this 5 minute supply zone will further push the prices down. It didn't happen. That means the demand is very strong. You should alert immediately. So you have to exit from the trade. So that means those who did not place your profit booking orders before 4 rupees before this zone, all those people should exit from your trade based on this trailing stop loss. That way you would have got 2,988 rupees profit, which is close to 3,000 rupees, let me say. Earlier, you would have got another 1,250 rupees profit you would have got. Another 1,000. Those who placed your exit orders 4 rupees before this zone. But those who are waiting prices to enter into those zone and there you want to exit, probably you would have missed your profit booking in this area. So definitely at the time of violating this 5-minute zone, you have to exit. So 2,988 rupees profit, which is 3.5% ROI you would have got. See how much difference this 4 rupees difference has done. Otherwise, we would have got, see, if you would have exited maybe 4 or 5 rupees before this zone, you would have got 5.2% ROI. Now your ROI is reduced to 3.5%. But you might be asking a question, for a small profit, 2,988 or close to 3,000 rupees, how we are getting 3.5% ROI? Because this is a good ROI, right? The reason is the margin cost of Atul is around 85,000 rupees. Because it is around 85,000 rupees, we got. Normally, most of the futures will be around 1,50,000 to 2 lakh, in between 1,50,000 to 2 lakhs rupees. Majority of the future lots. Some future lots are beyond 2 lakhs, but majority are between 1.5 lakh to 1.5 lakh to 2 lakhs rupees. So that is the reason why at least to get 6.1% ROI, you need to get a profit of around 8,000 or 9,000 rupees. Because this one is very cheap, the cost is very cheap. The margin cost is only 85,000 rupees. So that is the reason why you got 3.5% ROI just for a profit of 2,988 rupees. So this is about Atul, but anyway, you would have brought 2 lots if you are planning to invest maybe close to 2 lakhs rupees. But whatever it is, profit is a profit even if it is small compared to our earlier trades. And the next one we got the entry is ABFRL, Aditya Birla Fashion. But this one is stopped out. It is stopped out, but we are not considering this is a stopped out because we identified this zone will be violated. How? First, let me show you the zone. This is a 75 minutes. Sorry, this is a daily zone. No, 75 minutes zone, not daily. This is a ERC candle, is a leg-in candle, 1, 2, 3 base candles, and we have a leg-out candle. This is what identified by our software yesterday. But see how easily the zone is violated. Already we fine-tuned this zone. While fine-tuning, we are able to identify. The advantage of fine-tuning is it will tell you the zone is having a good order flow or it will be violated. When it will be violated? There are 2 reasons. Reason number 1, the structure in the lower time frame, that is 15 minutes or 5 minutes, the price structure is not good. If price structure is not good, mostly the zone will be violated. And what is the second reason? That 5-minute zone, whatever we fine-tuned, that would have been already tested. That would have been already tested. In that case, we can tell the zone will be violated. But is it already tested? Now look into this chart, 75 minutes chart. Look into the fine-tuned zone. Is it already tested? It looks like it is not already tested, right? But that is not the case. Higher time frame, if you are watching any zone, you will get such kind of wrong impression. It is a very good learning for you. Why I always tell you, you have to go to 5 minutes and then you have to inspect the chart. If you are seeing from daily chart or if you are seeing from 75 minutes chart, everything looks good. Easily we can say this zone is a fresh zone. We can definitely take a trade here. But see, the magic, once you get into the lower time frames, you will understand. From higher time frame, it looks like a fresh zone or fine-tuned zone. Now I am showing you this 15 minutes time frame. See here in 15 minutes time frame, we have a drop candle, 3 base candles and a rally candle. And prices came down and tested the 15 minute zone. 15 minute zone also you cannot plan a trade because it is already tested. But what about our 5 minutes? 5 minutes is inside the 15 minute zone. Is it tested? Now clearly you can see there is a candle already went inside the 15 minutes. From there the pending orders pushed the price in this candle. That you get better clarity when you get into 15 minutes time frame. Sometimes this candle could be part of the leg out, 5 minutes leg out. If that is the case, this is a valid zone. That possibility is also there, right? So that's why you cannot take you cannot make a comment by seeing higher time frame zones. Always you have to get clarity or confirmation only after seeing the zone on that particular time frame only. This is the point you should not forget. So now let us go to the 5 minutes. Let us look into this zone. See here in the 5 minutes, we have a drop, we have a base candle, and then we have a rally candle. See the next candle, already it took the orders from this zone. And moreover, look into this base candle. Is it really a convincing? It looks like a ERC candle. That means you have a, if this is a ERC candle means it is a leg candle. See, this is a leg candle. This is also a leg candle. This is also a leg candle. This is also a leg candle. Then where is the base? Without a base, where is the proper order flow, pending orders? So that's why you should be very careful. When you have such kind of large candles, but we are compromising. We are compromising and planning a trade in this area. That means we have drawn the zone up to distal line. See, this is only, we cannot clearly tell, we cannot clearly tell this is a leg candle or even this is a base candle. This is in between, some kind of confusion. Some people may say this is okay, no problem, I can consider this as a base candle. Some people say no, I cannot consider. The range of this candle is above medium size candle, above medium size. When it is above medium size, mostly we cannot consider that as a base candle. Some people will argue. Is it a medium size candle? No, not really. Is it a large candle? Maybe a little less than the large candle. See, these kind of candles are like in between. It is a real testing for our analysis, such kind of candles. See, this is a medium size candle. This drop candle is a medium size. Now compare this drop candle and this candle. Definitely this is a big candle. That's why what many of the people, especially experienced, what they do, if they have a doubt to decide whether this is a base candle or a leg candle, they will not draw the zone like this. They never draw the zone wick to wick. They draw the zone only this body to low of this candle because this is the demand zone. Now that way risk will be minimized. If there is a strong order flow, they get a trade. See here what happened here. The next candle opened with a gap. Opened with a gap. After that prices came down. and entered into this zone, definitely there are some institutional pending orders. See how they pushed the price again up. After that, again a new zone is created and further went up. That is a different story. But within this 15 minutes area, so here already it consumed some order flow. Because it consumed some order flow, and this candle also is not really a convincing base candle. By seeing all these things, planning your trade in this zone is not really a wise decision. See today what happened? How easily this zone is violated. First of all, 15 minutes zone itself is already tested. Now inside this 5 minutes area also already earlier it is tested. So easily it is violated. Because we have a lot of doubts in our mind whether is it a valid zone or not. Excuse me. See how easily it is violated. That's why we didn't plan a trade in this zone. We know this zone will be violated. Generally what we do, forget about this analysis. Let us assume this zone is a good zone. This is a very good base candle. Let us assume. When we have such kind of rejection from the just proximal line of this zone and a huge rejection, generally it is an indication that there is a very strong order flow. We don't mind to take second order in this zone even though it is a tested zone. Sometimes if the order flow is really strong, it works even for second time also. Because some people will take second time order. It is an aggressive trade. If a tested zone, if you are taking, unless it is a high liquidity zone, if this is a 5 minutes high liquidity zone, definitely it supports multiple times, second time, third time. If it is not a 5 minutes high liquidity zone, if it is a normal 5 minute zone, once it is tested, we don't take trade. But some people, what they do, when there is a strong such kind of rejection, it is an indication there could be a strong order inside this zone, order flow. So they don't mind to take if the risk is minimal. Okay, if it works out, they get a very good profit. If it doesn't work, very small amount they will be losing. So that way some people will take even second trade if the rejection is very strong. We can also plan. There is nothing wrong in planning another trade. But see, this candle created a lot of doubt in our mind. See, look into this candle, this leg out candle, and see this candle. Almost they are same size. When almost they are same size means, what I mean to say, the range of the leg out candle and the range of this candle which we consider as a base candle, both are having same range. So that's why we have a doubt about this particular zone. We compromised and we drawn this zone. Maybe one time, maybe you can consider, but because there is a strong rejection again, second time is, because one time also this is immediately after the zone creation it worked out. Because it is already tested once and we have some doubts about this zone, and planning a second time trade in the same zone is almost like a suicide attempt. See, that is what happened today. Easily the zone is broken. Maybe this will be a new learning for you in this example, because you have seen many such kind of examples. But this example is something different where we compromise and drawn the zone. Because sometimes what we do in especially in 5 minutes and all, many times while drawing the zone, our importance is not perfection in drawing 5 minutes. Maybe you look for perfection in daily zones and above. But in 5 minute zones or 15 minute zones, many times we compromised. We didn't look for the perfection. What we looked is whether there could be a possibility of having order flow or not, based on some kind of price action close. Like before the zone, some rejections are there. Before the zone, some pro gaps are there. We have given importance to those points rather than giving importance to perfection in drawing the zone. In what way perfection is missing? Maybe the zone layout is not good. We have seen layout is not good, but what we have seen, follow through candle. If it is having a follow through candle, we consider that zone as a valid zone, even though it is not a perfect zone. Such kind of things we are doing only in 15 minutes and 5 minutes area. We never applied those concepts on daily zones or 75-minute zones. Exactly the same way, while drawing this zone also, we didn't give importance to the perfection for drawing the zone. Even though we are having some doubt in our mind, this is a ERC candle, still okay up to this from zone, this body of this candle to the distal line only we have drawn the zone. But that itself is already tested. So that is the reason why we didn't give any importance, further importance to this zone. This is one point you have to understand why we didn't give importance to this zone today when prices are entering into this zone. Remember this point, if in any future, if you draw such kind of zones with imperfection, if already they are tested once, don't take chance for the second time. You have to take chance for second time only when the zone is perfect and strong rejections are there from the proximal line, just touched the proximal line, you don't mind to take second trade when the zone is perfect way. But otherwise, do not take risk by giving a second chance in such kind of zones which are not having perfection. This is what I am expected you to learn from this example. Okay, only these are the two stocks only got the entry today. One we got that one stock Atul we took the entry and got some minimal profit. And ABFRL we haven't planned any trade because we know this will be violated. And next third one is Kotak Bank. This is a daily zone, daily demand zone. See, it supported several tests earlier. This is the first test, this is the second test, this is the third, fourth, fifth. Several tests it supported. Still in the recent price action, we identified some order flow here in this area. Let me show you. So where we can plan a trade either in this zone or the one below this. The one below this is from June 2022. So we didn't get a chance to fine tune at the 5 minutes area. But this one is March 23. We have 5 minutes data. That's why we fine tuned. So what we did, we went to 75 minutes area. In the 75 minutes, we identified a fresh zone here, a 75 minutes. We have a legging, base candle and a rally candle. That way we have drawn 75. Inside we have drawn the 15-minute zone in the recent price action. So let me go to the 15 minutes time frame. I'm just telling you how we are identifying fresh zones. See here, we have a leg candle. This is a ERC candle, leg candle. 4 base candles and with a gap there is a leg out. After that, prices entered into this area and already tested. This one is already tested. From where it is tested, the 5 minutes area it tested. Let me show you the 5 minutes area. So here we have a drop, two base candles and a rally candle. But it is already tested. And this test is type 1. Now let me make it to type 2. Type 2 entry. See here. Type 2 level prices, it looks like a rejection before entering into the type 2. That's why we can take a second chance in this zone. First of all, there is a strong rejection. See the movement of the price after this. And this zone is also a good zone. We have a very good drop candle, two base candles, and a rally candle with a gap. Everything looks good. So nothing wrong in taking a type 2 entry again. If you see type 1 point of view, zone to zone, it just kissed the zone. And the pending orders, see immediately how it pushed. And in the next candle, how again further it went up, went up, went up. All these are all 5 minutes candles. So that's why the plan is type 2 entry. Type 2 entry prices did not enter. Before itself there is a rejection. That means before there is a gap is there, there could be some more strong order flow is there. If at all prices enters in this area, whatever the pending orders are there, it will push. In case if the zone is violated, the risk is minimized. Very small risk now. Because the risk is very small, probably we get a loss. Okay, fine. Why can't we take a chance? Because type 2 level, it's not tested. Type 1 level, yes, it is tested. That means price is already entered. I would not have taken if there is no rejection. After that, see, prices did not enter, so even second time. Immediately there is a rejection, and the next candle again further prices moved up, came down, again further moved up, 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 up. And this would have been happened only because there is a very strong order flow. That's why type 2 level we are drawing the zone. When you see the type 2 level, it looks like a fresh zone at type 2 level. But overall zone is already tested. Here what I want to say, there is nothing wrong in taking a chance here. See, our understanding, our analysis difference in the previous stock and the current stock, how it changed. Previous stock also we have a rejection there. But why we didn't take? There the zone structure is not very convincing. Probably if you look into 1 minute level maybe you would have find a zone there. But 1 minute level zones, there is no guarantee how strong it is. At least minimum why we are looking 5 minutes, at least 5 minutes level we have a guarantee. 1 minute also works, but if it is a high liquidity 1 minute area, it works. So that is the reason why we have given another chance to this zone at proximal 2, type 2 proximal. See, most of the time we take entry at type 2 only. But I am trying to tell you, this zone is already tested, this 5 minutes, but type 1 level, type 1 proximal it is tested, but not type 2 proximal. See, tested zone is a tested zone. And moreover, remember, maybe some people might be getting, especially beginners, you might get a doubt how to consider the testing, whether the zone is tested or not. Is it based on the type 1 or is it based on the type 2 or is it based on the type 3? Test should always be considered based on the type 1 proximal only. That is zone high. Forget about type 1, type 2, type 3. Zone high is tested or not. Now, see, now I didn't draw the zone high. I have drawn the zone at type 2 proximal. Those who are looking into this zone, you may think this zone is a fresh zone, it is not tested. But actually that is not wrong. That is not right. The point you have to understand, even though it looks like this zone is not tested, but actually it is tested. To check whether a zone is tested or not, you need to draw from wick to wick. From higher wick to lower wick of all the base candles, you have to draw. Higher wick of all the base candles, lower wick of the base candles. But in lower wick of the base candles, generally demand zone, again you have to consider leg candle, leg out candle also. You already learned those rules based on the zone patterns. Whichever is the proximal line, that should be the zone low. Whichever is the type 1 whichever is the distal line, that is the zone low for demand zone. Whichever is the type 1 proximal, that is the zone high. That's why always we say wick to wick, higher wick to lower wick of that particular zone. See the higher wick, if I draw, see, now clearly you can say this zone is tested. It looks like it is not tested when I draw the zone from type 2 level. This is one important observation you have to make. It looks like it is not tested, but actually this zone is tested. Why we are taking second chance? Because there is a rejection from this area. The following candle, see the huge move. That means from this zone it pushed the price up. That's why we want to take a second chance, because a type 2 proximal level, any order flow, that order flow is it's not consumed yet. The type 2 level, whatever order flow is there within the zone, that is not yet consumed. That's why we can give a second chance to this particular zone. Not because the type 2 level order flow is not consumed, but also there is a rejection before that. We have given importance to this rejection, and not only rejection, but after the rejection, the move towards the up. All these points we considered, and then we are giving importance to this. So that is the reason why we planned a trade in this particular zone. But today, prices did not get into this. This is just, I'm giving you this explanation because it will be a learning for you when we can take chances. Just I want to tell you, when you can take some chances, unless you take chance, how do you get the profit? Of course, sometimes when you are taking some chances, you may get losses also. But what we are doing, we are minimizing the risk. Always we are doing, why always we are going to 5 minutes level and taking? Because the moment you go to the 5 minutes level, your risk will be minimized. And also you identify a strong order flow in that area if the 5 minute zone is very good. But we are not blindly going to the 5 minutes. We are ensuring the 5 minutes is there inside the 15 minutes. Again we are ensuring the 15 minutes is there inside the 75 minutes. The zone confluence. We are not deviating from the technique. If you deviate one time frame and go to the next time frame, that is called as aggressive trading. We are not going for the aggressive trading. We go to aggressive trading only in some special scenarios. That is when there is a strong price action clues are there. Then only we are going for that. But otherwise, this is the approach. 5 minutes should be there inside 15 minutes. 15 minutes should be there inside 75. If it is a daily high liquidity, that 75 minutes should be there inside the daily zone. Always remember this point. This is one important learning for you from this talk. And today prices did not enter into this zone. So we didn't get the entry. And the last one is emphasis. This is a 75 minute zone. See, at the distal line, there is a zone, fine-tuned zone. This one is already tested. I want to show you. This zone is already tested. Prices went close to the distal line of this zone. Just few paisa before the distal line, the rejection came. Next time, when prices are entering inside, easily it will be violated. Unless a new 15-minute zones are created again at this area. This will be violated. I just drawn just to verification, to verify what will happen if today prices enter into this area. But actually, the one we planned is the zone that is there at the distal line of the supply zone. Let us look into that. Let us go to 15 minutes time frame. See here, this 15 minutes is already tested. We have a leg candle, base candle, and a drop. See, this is not a great leg out. But we considered, because 5 minutes level, the zone is very good in this area. That I'll show you when I show you into the 5 minutes. See here, again, we have a drop, base, drop. And this one is overlapped. That means the order flow is actually picked up from here. The 75 minutes order flow. But the question is, again, it is already tested. Can we consider? No, we cannot. But we have to look into the 5 minutes. If 5 minutes is not tested, we can consider. Look into the 5-minute zone here. Maybe you can consider at 5 minutes ERC candle. This is, even though it looks like a base candle, but compared to the all other candles before and after, this is a bigger candle. So that's why, based on this range, 5 minutes leg candle, leg in, and we have 1, 2, 3, 4 base candles and a drop candle. See, it's a very tiny 5-minute zone, but see the tiny 5-minute zone, how it holded the prices. See here. Went close to the distal line, just 10 paisa or 15 paisa before the distal line. Then the order, the pending orders, probably there is a strong order flow, pushed the prices down. So because it is tested, we can't plan a trade in this zone. But what about here? We have a drop candle. This is a ERC candle. Then you have 1, 2 base candles and a drop candle. Not a great leg out, but okay. After that, again another 5 minutes ERC. Again, this is a very big drop candle. Already prices entered into this area. So it is tested. So that means we cannot plan trade in this zone also. But my question is, do institutions consider this as a trap? Because it just overlapped between 75-minute zone and 5-minute zone. This is also a 15-minute zone also. 15 minutes is also same. Do institutions consider this as a trap? If that is the case, we may take a second entry also here in this zone. Because the risk is very minimal, there is nothing wrong in taking a chance. So that's why we can try again second time in this zone. Because if this is a bull trap, probably it will give a very good profit. What happens? This distal line will be violated just above. After reaching, there will be a real order flow is there just above this line. The small area, lot of pending order will be there. That will push the prices down. If that is the case, we have to keep our stop loss in this line. Because this is the highest wick in this area, price area. But anyway, prices did not enter into this zone today. We didn't get a trade. So these are the high liquidity zones we generated yesterday. Hope this analysis will be help you. At least a few points you will be learning from this discussion. Let us all meet again in our next video. Thank you.